Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about Alibaba earnings. I don't know if you guys are aware, but Dylan and I are both Alibaba shareholders. It's been a really controversial stock over the last year. Going to take a quick peek at their most recent quarterly earnings released this week and kind of see where our thoughts are regarding whether or not it's still worth holding.
And if I should jump off a bridge. If you like this kind of entertaining stock market content and completely unedited, no filters, let's just get started.
Two stupid guys trade stocks.
This is just going
There he
to
is.
turn into how many times we can make a mistake.
Yeah, I love it.
Just go.
I mean, that's what this channel's about, is our investing portfolio mistakes. But there is the patron saint of Alibaba stock himself, Mr. Charles Munger. I'm not sure if you're familiar with this gentleman. Most recent quarterly report, he was still holding the same number of shares as the prior quarter. As far as Alibaba shares, I think it was like 300,000, but in his daily journal corporation. So we got a nice positive pop up actually on earnings this time, which was pretty cool to see because they reported before earnings, before the open of business on Thursday,
Right.
this past week. And then, of course, the market had a real conniption fit on Friday, and they went with the rest of the market. But it was, market reaction was a little positive on Alibaba. Why? That's a good question.
That is a good question. Please tell me if I should add more shares.
Oh, well, that's a different story entirely. But, I always love the slant that they put on news headlines to me. It's always so funny. So Alibaba shares rise nearly 2% after earnings beat, but reports first flat revenue growth in history.
Okay. All right.
Yeah.
Hasn't
like-
this been happening with most tech companies due to 2021? Yeah. Okay.
Yeah. Particularly ad revenue driven companies. But the real big thing here with Alibaba in particular was this massive lockdowns of China related to their no COVID policy. And in fact, like as we kind of get into it a little bit more here, they talked a little bit about how, they had pretty poor months in terms of April and May, but then June they saw a reacceleration in their business. And I actually have a chart from like consumer spending in China as a whole to kind of reflect that.
Okay. Nice.
Yeah. So this is the kind of the headline numbers. Where do they come in the revenue? Where do they come in with like actual EPS or profits? The revenue was roughly in line with, like I said, the prior
Earnings
year ago
expectation.
quarter, but they beat slightly. In terms of EPS, they did beat, but it was still a significant down step from prior year, right? 29% year over year decrease in net income. Not so great, but considerably beat there when you're talking about what the actual predicted was. There was actually a 10% beat on the bottom line, which is nice, right?
Yeah. Yeah. Solid.
Yeah.
More fiscally responsible.
Yeah, I agree. So that comes up actually later on too. So in terms of what they're saying regarding this China lockdowns and no COVID policy here, like I was saying, April and May were relatively slow months. So that's the CEO there, Daniel Zhang, talking about it. But they saw resurgence in June. So this is actually from, I got it from tradingeconomics.com, but it's a National Bureau of Statistics from China data, and it's regarding the consumer spending on a month-by-month basis. So as you can kind of see here, they had a pretty substantial kind of downtrend here for a couple months regarding the massive lockdowns in China. And Alibaba was certainly, someone that had some headwinds during that time period because of it. But as we get towards the end here, June, you started to see consumer spending tick back up.
Right. Okay. I mean, all solid news. I'm okay with that.
So I think that the thing that highlights though is when they had they were flat revenue and then they were actually beat on like the EPS here down year over year. But when you had that many like headwinds for so much of the quarter, only 2/3 of the quarter, that's a pretty significant thing. That like this could have been a much worse report, and that's what the market was kind of betting on, which is why we saw that positive reaction, at least in my stupid guy opinion.
Positive reaction, which we immediately lost all games, like as it happened.
We're going to do a separate video why that happened. Okay, that's a separate topic. So like these are the kind of the major financial highlights that they threw out there. Like I said, basically flat. The cloud growth was only 10% over year, which is not great. You've seen a quarter-on-quarter deceleration of cloud. Now they're certainly facing the headwinds where it's not confirmed, but they talked about losing the cloud kind of contract for a U.S. social media company. Any guess who that might be?
U.S. social media face? No,
Not
well, I don't
based
know.
in the U.S., but U.S. data from a social media company.
I have no idea.
TikTok. That's the rumor,
But
is
that's
that
an
they
American
lost
company.
TikTok. Well, it's not an American company, but the data from American users is housed in the U.S. now, whereas previously it was housed on
Oh,
Alibaba Cloud. But in order to kind of appease the lawmakers in the United States, there was a move that allegedly occurred. It's all unconfirmed here.
this is
Uh,
a complete sidebar. If anyone uses TikTok, please read the user agreement that you signed. It's not good. Throwing it out there.
they all have user agreements. I personally actually deleted it off my phone because like I have to go, TikTok Reels. I mean, I'm sorry, Instagram Reels is the way to go. But back to like the Alibaba earnings here. So definitely some decrease in EPS. That's really largely attributable to the fact that the units that grew was where Alibaba is directly selling the product, as opposed to where they're doing their kind of consumer management, where they're advertising for other sellers on their platform. Those are higher margin businesses, so that they traded down in terms of the margin of their business, but they were able to keep like the gross merchandise volume approximately equivalent. That's why you see that contraction in EPS year over year.
All right. All right. All right.
But nice little bonus here. So free cash flow grew. They actually had paid portion of their fine during this quarter last year. So they had a nice positive 7% in free cash flow, which is, always a nice thing. You like to see free cash flow growing because that's what as a shareholder, that's what I feel like I own.
You're right.
You
I
know,
did see an interesting take on Baba regarding fines, on how in this type of business they were relating it to like banks. Like you pay certain fines and it's just a cost of doing business.
yeah, I can see that. I mean, it'd be an interesting chart if we actually at some point we could pull up data and look at how many times Google has been fined compared to like Alibaba.
Oh, probably not that much.
Yeah, I feel like Google gets fined by the European Union like on a monthly basis, basically.
It's not good.
I know. So, one of the things you have to ask as a shareholder is what do they do with these, this kind of free cash flow? And, to the tune of $3 billion, they bought some shares here, which is awesome. $3.5 billion were bought back during this quarter, which is phenomenal, at least in my personal opinion. So,
Yeah, no, that makes me feel better. If they can just
yeah.
accumulate as much around 90 to 100, I'm saying 90 to 100 because I don't ever want to see 70 again, ideally. And if it does, I might have to buy more. I don't,
Yeah.
I don't want to. I have enough,
I,
but
I Yeah, I can't say I blame you down at those sort of price ranges. So you're looking at still $12 billion they have available for continued share repurchases that have already been authorized, because they had authorized all the way up to 25 billion, and they've used 13 billion of that so far. So they have about another year or so at the current pace in terms of share repurchases. And that's not to say they may not they may increase the actual share repurchase program allowed amount before then. I wouldn't be surprised.
all right, all right, all
So
right.
when you look at a segment by segment breakdown here, this is the China commerce is still by far and away like their main driver of their
Right.
business. The kind of a disappointing things I would say is the international commerce headwind here. They did talk a little bit about the kind of Ukraine Russia thing and how that disrupted their growth patterns in terms of getting into the EU more, and then also some way the EU does like the value added tax gave them a little bit of a headwind there. We already talked about the cloud infrastructure only being about 10% growth, which is definitely disappointing. And you saw some contraction in some of these other segments here. These are the smaller bets here. Google calls other bets on their balance sheet, which makes sense. In terms of actual being like accretive to shareholders, things that have positive margin, it's really just this China commerce, and then cloud is like barely break even at this point. Still, nice to see that it's not losing money, because there are plenty of companies out there still losing money trying to get a software service like cloud off the ground. So I
I
like to
would
see that.
I would love to have them be as successful as like Amazon Web Services. That would be awesome. Like in the future. Huh?
Never gonna happen.
Never gonna
Never
happen?
gonna. Never gonna happen. They could be the Amazon Web Services of China, but that's like it's still you add in the secondary thing. It's like being the most beautiful person over 85. Right? Am I wrong? Like
Okay.
it's so they're a little handicapped. You have to kind of give them a little bit of edge here because let's face it, like no one's ever going to trust a Chinese cloud provider to the same degree that they would trust Amazon.
Yeah,
I'm
no,
sorry, but it's just not going to
that's
happen.
fair. I love the
Yeah.
comparison. That's
Yeah.
solid.
There was another one I was thinking of, but I couldn't go there, and I can tell you that one offline because like, I just don't want to put it out there.
So excited.
In terms of their balance sheet, they're still very well capitalized. You know, sitting on $67.6 billion in cash. What do you think in cash and short-term investments? That's pretty sexy a number, isn't it?
Yep, especially if we are thinking there's going to be an economic downturn-ish, so it will definitely help to have that much cash on hand. Pretty much the opposite of cruise lines.
Yep. Yeah, they're in the same position as the large mega cap American tech companies in that they're well capitalized and don't have a whole ton of debt. That's what it comes down to. In terms of being good stewards of cash, this is another parallel they have with the American mega cap tech companies. Is you actually saw a headcount reduction quarter over quarter. You know, that's a little bit under 10,000 employees that they actually lost during the quarter over quarter numbers there, which, you know, to me at this point in time is a good sign that they're being good stewards of capital and may have contributed to their 10% earnings beat and that they have reduced headcount prior to this downturn. I went through it for fun, a little free cash flow yield exercise here. So their market cap right now is about $250 billion. I did the net cash calculation here, like I said, $7.66 billion in terms of cash and short-term investments. $33.95 billion is their long-term liabilities, which really for them is more capitalized leases than it is actual true borrowed debt.
Right.
But still gives you a net cash position of $33.7 billion. The $3.3 billion is what their free cash flow was in this quarter. If you analyze that out, it's about $13.2 billion, which would be about a 6.1% free cash flow yield. So it's like having, a bond that pays you 6%, although it's, much less
safe,
certain,
safe
than something like that. But 6%, that's like a pretty sexy number there, I think, as far as like a yield at this point in time. When you have companies that have next to no prospects to yield 10%, companies with astronomical prospects might yield 1% or zero, even if they're not free cash flow positive yet. So I think Alibaba deserves a metric somewhere in between, and I think that's a reasonable thing.
For sure. We're going to have to see where they go here in the next year. Is going to be quite interesting. We've already done a video on it. They have made the list, even though they've already been on the list, because all Chinese companies are. A little bit not accurate. But we'll have to see what happens within our administration and their administration to see if this becomes a safer play. The minute that this becomes a safer play, double. Yeah. That's everyone's fear is, well, they might get pulled off the exchange. That's why people don't agree on it. So
yeah, their institutional ownership, at last I knew, was in the teens as far as percentage wise, compared to large mega cap American tech companies. We're talking about 70%, something like that. Yeah.
Charles Munger was 20% of the institutional. I don't know. I made it up. All right, guys.
Get to the next one.
Yep.